to Trading Lounge and the Australian report for the 15th of December. We're looking at the monthly chart here for copper, and we're going to be looking at this more often, and we're also going to be comparing this particular pattern to BHP and RIO and so on and so on. And what I want to point out here with this long-term monthly chart here is that we are now approaching from this high here to this low here, the 61.8% here, and we're also coming into this major level here at 8,000. So we can typically see that the market has consolidated in these spaces here before, so we can expect this market to do much the same too as it comes up into this space at 8,000 and sit there. I mean, iron ore's at 1,000 now, so that's going to vibrate there for a while. So copper's going to vibrate here for a while. So that means that a lot of these resource stocks are going to stall, and that's what we figured out yesterday. Now, I do want to over the days and weeks and months ahead, we will be looking at this chart more and more, and there's a bit for me to figure out with this particular pattern here and comparing it to BHP and RIO and so on and so on, and that's what we'll be doing. And a lot of these highs and lows match up with BHP and RIO as well. We looked at that a few days ago. But what I wanted to talk about today was the 8,000. I also want to talk about this trend going up here in a bit more detail. And also I want to mention this trend here too, because this trend here is also in 5 waves here. So that can leave, when I sort of look at all of this here, we can see that this move up through here is in 3 waves here. Right, so it's possible to look at this as an A and a B and a C wave here as a corrective wave. It's also possible to look at this as an A and a B and a C wave here in 3 waves, and it's also possible to get 3 waves out of this move here. So it's probably also possible to look at this in 3 waves as an A and a B and a C wave up here for this, and finishing at the 61.8%. So that would leave us with, well, an A wave, a B wave, a C wave, a D wave, and an E wave here. So the E wave would come in this regard here in 3 waves back here before we see a push to the upside, and looking at this whole market here as a bit of a triangle pattern coming through here. That's one way to look at it. We'll also be looking at it in the bullish way, but also too, this is where the trading levels comes in handy, because all we need to do really is work with this number here, the number 8. We know 8's a profit-taking number, and so we're going to see some vibration across this. But at some point, if we see the 8,000 at support, then we can look as a tested support in a classic trading levels manner, and that would mean that we would need to see either this pattern here, if this is the 8,000 across here, we would need to see the arrival, the reaction, the first high above the level, and then a move back below the level, and then support over here. Now, when we see this, that means that we can go long in the resources again. This will take a while, of course. There's the variation on this, of course, which is this pattern here where it doesn't come back below the level here. And then we may as well also have a look at the third pattern that occurs at a level. Doesn't happen that often, but it happens often enough for us to mention it, where it doesn't stop at the level here. So if we see it burn straight through the level, we'll know that it'll exhaust itself, and we'll be able to check the volume on that as well. It should be lower volume, and we'll see it fold back in here. One way or another, we should see some type of correction at that level. So normally with all of this, we trade to this level over here, get out, wait for the correction, because that's where you lose money, and then we focus on about getting back into this once we can understand it. And in terms of understanding it, it takes a little while. The more that it unfolds, then, and the more patient we are, the better view that we're going to have on it. It's difficult to judge it in its first leg down or second leg down until, well, we can judge it partly once the whole leg has come down first, to see if it's in 3 waves or 5 waves, because out of the 11 or 12 different types of corrections in Elliott, we can pretty much halve them if we get 3 waves in the first leg. So that makes it life a little bit easier. That said, let's pick this up here on this chart here. So this is it here. So from that low here, let's just put that in here where I mentioned this is a weekly chart, of course. So where we mentioned that we've got 5 waves up here, we've got 1 and 2 here, 1 and 2 and 3 and 4 and 5 here and 5. And so we've got 5 waves in this section here, and then we've got well, 3 waves. Here's an A and a B and a C wave here and down again. That could also be counted differently. But we need to look at this as either wave 1 or wave 2, wave A and wave B here. And if that's the case, then this can take us up to wave C at this point and terminate here. And of course, yes, it can go through that as a wave 3 here. I understand that as well, and that's something that we'll just need to work through as well. But we know that this is roughly the 61.8%, so it means that we need to understand this trend through here. So I've counted it so far as sort of 5 waves up to this point, and then we're looking at another 5 here. So to be a C wave here, we would need 5 waves. So that means that we would still see another 5 waves up here higher than that. This one's the longest in this case. This one is shorter. So the third one would need to be shorter still. The other way to look at this too is that maybe I've counted it wrong and we've got wave 1 here and 2 here and 3 here and 4 here, and we're going up into the 5th wave here. And in this 5th wave here, I can see we've got 1 and 2 and we've got 3rd wave. So we still need the 4th and the 5th wave here. So if you're long in commodities, we still got the 4th and the 5th wave to go before we get a larger correction at this level here. So we can look at that here on the daily chart. So first of all, just want to draw your attention to the ending here. So from this low here as wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5. So we still got wave 4 that can pull back to the wave 4 of 1 less degree in here, or even a tad lower than that. And then wave 5 to the upside. So wave 5 will take, how many days was this here? That's how many days will take this one here. And then there'll also be wave 4 here as well. So we've got, we've got a month really, I guess, before, well, a month in trading terms is 20 days. So we've got time before that tops out here. Now, how do we count this to the upside? Well, my first inkling was that we've got wave 1 here and 2 here, and 1, 2, 3, 4, 5 for the 3rd wave here, 4th wave here, and 5th wave here, and then we would label that wave 1 and wave 2 here. But what I need to be careful about is that somehow in here, it's a bit tricky to work out in here, but do we have this wave 1 sitting in here and wave 2 sitting here, and this is all of this is the 3rd wave to this point and a 4th wave here, and then we've got this 5th wave coming up into this space here and finishing there for that wave C up there, and that's the end of it at that point. So that's what I've got to figure out. But like I mentioned, we will be going through the process of the arrival, the reaction, the first high above the level, and then the ABC pattern here. And we could get a larger version of that too. We can get a smaller version here than a larger version. But normally we trade to this level. This is why also yesterday we looked at taking profit in some of the stocks. So let me just bring those up a little bit here. First of all is BHP. So yesterday with BHP, we were looking, it does appear there's more into this trend here. So I would say that we would be looking for a move down and then a move up at that point. But it was a nice place at the top of group 1. This is 40 here, medium level, daily chart. So we can look at group 1, 2, and 3 here as group 1. And until we get support, if it's going to fail, this is where it's going to fail from and move back into this space here. Now, in terms of moving back into this space here, what I normally find with group 1 here, 1, 2, and 3, group 1, if the number 2 here becomes the retested resistance, then we're going to be pulled back to the closest largest number. Now, quite often what happens is that we spiked down to 1.5 here, 41.50, sorry, and then we recover and we find support and we move off again from that point. So we need to be aware of that. So if you're going to get out of this trade, you'll definitely need, if you wanted to stay in this market, but wanted to understand where you should get out. If the 42 here becomes the retested resistance, so we still need the first low below the level and then a move down at that point, that's the point that you'd get out of that trend. But otherwise, we're taking a percentage at this point, and US BHP was a bit softer overnight. Crude oil's up slightly, 0.7%. Or you can take profits here, and we can wait for the 43 to become the tested support, because we will be seeing, if it's going to be bullish, the arrival, the reaction, what we're seeing now, the first high above the level, some sort of little ABC pattern, and then moving up from there. I'm dramatizing it a little bit and making it much larger than it will be, but just to get that pattern in your mind, because you'll be able to look at that on the intraday basis. So no change there for that. And we've also been looking at RIO, so we'll just have a look at RIO as well. So we've been stopped out of RIO at this point. I'm okay with that. I can see that we can also go higher here as well. But we know that from iron ore, looking at iron ore here, coming up into iron ore here, we've had really, 2 days to make decisions about this. But we will definitely be, I don't know if that's the end of wave 5 here. I need to pull that apart. But we are going to be vibrating at the 1000 here for a little while. So I'll get into that after this matures here a little bit. But as I mentioned yesterday and the day before, that this is the place to tighten up on those sort of stocks, RIO, and better look at FMG as well. We're looking to tightening up on Fortescue as well, either taking a percentage or taking profit here at 23. That is also the top of group 1 as well, and so of 20, so we've got 1, 2 and 3 that make up group 1. If we get a tested support on group 1 here, then we'll go up to 25. In the meantime, same thing applies as well. If group 2 here, we'll see a bounce off that. If group 2 here down to 2150, it can go down there and go back up. But if it makes the first low below the level and then breaches that with another low here, then that's where you need to be out of that. That's where that stop needs to go there, so long as you understand that. So you have to wait for the first low below the level. So if you took a percentage, then you can do that, because if that becomes the retested resistance, then we're likely to be pulled back down to the closest largest number at that point. It's as simple as that. And look, it's not perfect, but it works most of the time. So it's good to understand it, and if you see it, then you know when to act. Okay, so just want to have a look at the banks for a moment. So yesterday we looked at, this is CBA here. I'll just go to the daily chart here, but it does look like we are, now I've had we can look at this in 2 ways here. We can look at this as wave 1 and 2. I'm comfortable with that. I just don't know, because of this spike here, I just don't know if we've got wave 3 here and wave 4 here and we're going up for wave 5. Into this little space here, making a new high here, and we would already have 1, 2 and 3, 4, 5 coming into that space. So that may be the case, really, or we could look at this here as wave 4 here as well. So I'm one for trying to find, I just try to find a balance on everything, because you've got to kind of decide, do I take profit? Do I take part profit? Where do I get out? What do I do? I think that there's no right answer. It just depends on your own sort of strategy. If you think that this market's going to go higher, well, then that's fine. 85 here, as I've mentioned before, would be a nice place to take profit for this market, or at least in part. It's not like the market has, turned down in terms of broken the trend to the upside. It would only, to me, if this market came down, if this market came down, we could expect it to do something like this. But if the 80 became the retested resistance, then it's this point here that we would get out. If the market's going to reject this number here, the number 80, like here, get a retest against it and then drop and make a new low, then that would be the point to get out. Then the trend has broken down, but otherwise it would just be a corrective pullback at this stage. So we may go a little bit higher here today. We are moving into the swing days of the week, so that's Tuesday it starts, and then Wednesday gets more so, and then Thursday even more so. So those sort of 3 days. Tuesday's never such a big deal, but you'll see profit taking in the morning, and hopefully the trend will resume in the afternoon. And Wednesday you get that V-shaped day, and Thursday's the bear day in the bullish weekly cycle. So it's normally the Wednesday and Thursday and possibly Tuesdays that take out your stop. So that's why we tightened it up right on FMG and RIO and so on before all that happened, you know. So that's that. I'll just go to here. I just want to double check on this because I've got pocket money in this myself. I mean, like I mentioned yesterday, from this low here, I can see that we've got 1, 2, 3, 4, 5 here. I can see we've got 5 waves in that structure. I'm a little bit unsure about all of this here. Obviously, this looks like 1 and 2 here, and probably, I mean, I can see 5 waves from this low, 1, 2, and then 1, 2, 3, 4, 5. If I look at that as 3 there. Okay, no, we could look at that as 1 and 2 here. I think that's a fair comment. So that means that that would be the, it's dropped a bit low for that. I mean, it's dropped down to 50% rather than 40%. Not a big deal. Is that trend to the upside finish? Yes, it can be, because it's made a new high here. So what this could do is it could, let's just, if I got some dudes here, yeah, let's hang on a second. So we can look at that. Actually, I better put that there. I'm just counting it as if I think that it's right at this point. If we were looking for wave 5 up here, just want to make these a bit smaller. And like magic, they're done. So we're going to put that here as wave 1. Back for wave 2 here. Just move these out of the way here for a second. That would make wave 3. That would make wave 4. And then we'd have wave 5 here. So that's what I would say at a guess. And then we can just move these out of the way here for a second. So we're going to see some sort of fallback here at this stage. That's if we put wave 4 there. Let me just double check in here. So this wave 4 can pull back to this wave 4 here. Okay. I mean, it's possible that we could count this as 1 and 2 here and 3 here and 4 here and an extension in the 5th wave, but it just doesn't make sense. It's better to look at it, if that's wave 1 and 2 here, and that's 1 and 2, then this makes the third of the third here. It makes that correct. So I think that, look, we may or may not be finished up through here. 85 was our target area here, but you may want to take that on the open. And then this wave 4 would come into play at that point. And then we'd have one more move to the upside. That's my best guess. So it wouldn't hurt. I mean, depending on, if you're a long-term trader, then this doesn't bother you at all. But if you're working the trade, then taking a percentage right here would be the go, and we'll try and get back in for this little run here if that's going to be the case. So I think also the takeaway for this as well is that if we're going to pull back in here for wave 4, we're going to get some sort of corrective move back, and that can be Tuesday, Wednesday, Thursday, kind of in all of that space, and then Friday and Monday running up here. Then how's that going to affect the ASX? But before I go there, I just want to have a look at ANZ here for a moment. Just bear with me a bit. Yeah, no, I'm not getting any really clear answers from that, but it does look like we've got an impulse wave here, which is good. We haven't made those highs there, so we'd probably pull back in here and then move up there again. Like I mentioned yesterday, it's very difficult to count 5 waves here. That's why we had to label it wave B here. Not really giving us a lot at that point, so it's not very helpful. So we can delete that. And we don't need that now. I'll just get my other chart back up for the ASX, and we'll have a look at the ASX. So, there it is. So in terms of the ASX, we know that the market could be a little bit softer over the few days ahead. The first thing I want to do is point out on the weekly chart here, it's possible to have wave 5 top sitting in play here. I think there's also the case that presents quite nicely. There's a few different cases. One is that if I took the banking sector, right, then we would look at that as wave 1 here and 2 here in the banking sector, and then wave 3 here, and then we'd put wave 4 back here, and then wave 5 to the upside here for that top into play. So, but if I took it from where we're counting now, we can count 5 waves up here, so we could have that as the top. But I'll put it there for the time being. But yeah, the other point with this too, if we go to the daily chart here now and talk, but I mean, we're looking at 1, 2, 3, 4, and 5. Where do we put that wave 4 on, this low or that low? There's cases for both of them. You know, putting it on this low over here would be in line with the S&P 500 and those guys. Putting it over here would be in line with CBA and so on. So yeah, a little bit tricky at this point, but let's go in here. So I mean, one of the things that I've always thought here is that we would have this particular pattern here at this level here. So the arrival, the reaction, the first high above the level, then the ABC correction. I know that we've had the arrival and the reaction here, and then we've had this little retest here, and then we've made another high here. But I think it's all part of the same thing. I still think that we need to have that high above the level and come down. So is this the high that we come down on the level here? And then we move up from that point. Well, looking at the resources, and probably also the banks as well, it would kind of suggest that, you know. So yeah, I was also having a look at the euro count as well, the FTSE and the DAX, and this is the count that we've got for those guys. I'm just saying, just pointing things out. So from the low here as 1 and 2 and 1 and 2 and 3 and 4 here, then looking at this as 1 and 2 and 3 and 4 and 5. I know there's a bit of debate about that. Looking at this here as wave 4 and then 5 waves up here for wave 1. So it's possible that that we can come down from this point here. So we could say that in the bullish world, if we got support on 6,700, then we would be bullish at that point. Okay, so if you want to be long, then you would need that 6,700 as the support. So that's pretty clear cut there. We could find a better way in. But we do need to have a look at the bearish moves for this as well. So there's other ways to count all of this pattern up here, I know, But we do have a strong connection to Europe or England, you know, the trade, the accounting, the taxation system, rather, the law, you know, there's so many connections. So the FTSE trades 10 times more volume than this market, but there is relationships there. So 4-hour chart, just go into the, so yesterday what we're doing, we're looking at more of a bullish count. So where we had blue wave 1 over here, blue wave 2 here, then green wave 1 and green wave 2 here, counting up here for 5 waves up here, and counting this back to this point here at the 61.8%, and then looking for a move to the upside. It's kind of interesting really, because this is the high here over this one here, and if that's the case, then I can label this here as 1 and 2 and 3 and 4 and 5 here. But the problem with that is that this move up through here doesn't count as 5 waves, which we can have a look on. But just entertain me for a moment, and if that was the case, then that would be up there further. I'll just take this here. That would be wave 1 here, and back for wave 2 here. And if that was the case, we'd look for a 50-60% retracement level back here. So we're there. We can come a little bit lower here at the 6624 area. So on the bearish side, we could also say that if the market found this level here, the number 2, this is all part of group 1 here, so we've got 30, just 30, 20 and 10, 1, 2 and 3. They make up group 1. And as we know that if we get a tested resistance at number 2, the pivot here, the number 2, the 20, if that becomes a retested resistance in that case, then you know that you're going to be coming down further at that point. Okay. Otherwise, we can look at this as wave 1 here with some sort of correction coming into this point, bouncing off group 1 and moving back up at that point there. So that might bring an opportunity into go long at that point. So going long at that point in here, what we could do is we could use group 2 here. So we've got 72 and then 80, and because that's really going to be the 61.8% resistance in here, and then 65 in here, 66, close enough. So if we do come down here and then the market comes back up and finds support on top of the 50 here, drops down here, finds support on the 50 here, you could probably go long there, but you would probably find that the 61.8% will be, I'll take it down to the 61.8% here roughly. So it really comes in the middle of group 2 here, the 61.8. So wherever that 61.8 is, you could then probably use the 6672 as a tested support to build in long trades at that point. Okay. So I just want to have a bit closer look at this here. I know that we could also count this down here as 5 waves here, pushing the button a little bit, but I'll just go to 100 ticks. So from the top up here, we could look at this down here as 1, 2, 3, 4, 5 here. And what I can say, and as for wave 1 and back for wave 2, that's all good. I can see from wave 4 here, we've got a very clear 1, 2, 3, 4, 5 here, okay? So we've got that 5-wave structure here. So that means that I'd have to fit wave 3 in from wave 2 here into wave 3 here and then wave 4 here. So I'll leave you with that. I've tried to figure it out. It's a little bit messy, but at the end of the day, it kind of makes sense. Wave 3 would be the longest, with wave 5 here and wave 1 being roughly the same length. And then when we come over to this point here, looking at this here, so let's just assume that this is wave 1 or wave A here, and back for wave B, 61.8%. And then we can see this move here, which is looks like a nice third wave, doesn't it? So 1 and 2 and 3 and 4 and 5 here. So we could look at it as an A and a B and a C wave here. Well, I could look at it as wave 3 as we looked at it before, and then have wave 5 over here and then wave 4 here for this. And we can put that in here. I just wanted to share what the problem with that is that it's difficult from this little... Oh, I suppose we could go that way, couldn't we? We could put wave 4 over here. That would fit better. Because I was thinking we can only get 3 waves here. A bit silly of me, but got to get the old grey cells functioning at early in the morning. So yeah, we could put wave 4 here. And wave 5 there. Okay, well that sort of matches up a little bit. And then we can look at this here as the... Copy that as the A wave, the B wave, and the C wave down here. And then that would leave us with, just copying these over here with, we'd have to call that wave 1 in here, wouldn't we? I mean, looks like we'd call that wave 1. But anyway, needs a bit of adjusting there for that. I'll just check on that in a moment. Anyway, a 3, 4, and 5 here somewhere. Yeah, okay, that fits now. Because the other little thing here is that if I grab a horizontal line here and I put that on top here, we can see that this has just gone a tad higher there. It's a bit hard to see, but you see how it's higher? So, you know, where that shouldn't be breached at that point. So, yeah, we can look at that in 5 waves. That's cool. So that should pull back down. We should see a bit of a softer opening here. I'd say that that's 1 and 2 in here, then 1 and 2 here, and 3 and 4 and 5. So probably would have to put that down here as wave 3. Then that would come back as wave 4 there, and then a wave 5 to come down into that point. So that means that you could, if we put this level in here, which is the midpoint, the 50, that... Move that level to 30, that should be there. So that's of 600, that's group 1, 10, 20, and 30, and then 50, and then group 2 in here. We don't need that one there. So I guess I can't draw on this side of the price with this chart, but if we finish this off here and then come back and find support on the 50, you could glean a position here, then glean another small position on top of 72, and then on top of 80, and then on 67, 100 there as well in that case. I know that's all a bit complicated. So yeah, because this is not clear to me as 5 waves or 3 waves, we need to treat it in both cases. So it's a little bit of a game of the bouncing ball really at 61.8%, because this is 61.8%, this is 61.8%, and then we're going to get another 61.8% over here somewhere. You'll need to adjust that. So, and then there'll be another one again. Copy that. Then there'll be another one down here somewhere as well. So it's a bit of a game of ping pong. So this one, this one, this one, and this one, and then do we break higher or do we break lower? So kind of see it a little bit like that too. Sort of that will be a little bit helpful. Okay, I'll leave it at that. I've waffled on way too long, but there you go. Alrighty, cheers.